Okay, we've reached the takeaway video here, and this is probably the most important video in that I really want you now to have a roadmap to be able to attack the markets where you gain back control. Okay, so the massive theta decay strategy of this online course basically gives back control to the trader. Okay, so let's go through what I mean by this. The first bullet point here: research stocks thoroughly. Just because a company has been a winner does not mean this will always be the case. This is crucial. Okay, the underlyings that you trade in your portfolio for income purposes are crucial. Is crucial in the extent that we look for good valuations, we look for excellent fundamentals, a growing dividend, and we have discussed this in the Procter & Gamble video, where we went through why I believed that the stock was due a bounce, basically because of its gross margins, its operating margins. So it's just because, you know, a successful blue chip has rewarded shareholders for 40, 50 years plus, this does not mean this is going to be the case for the next 40 or 50 years. That's why you need to constantly be listening to the earnings reports, watching the financials, making sure there are no trends that are deteriorating badly, such as margins and debt, so to speak. So, you know, sometimes a value play could actually turn into a value trap because the fundamentals in that respective company are not the same as they were in years past. Okay, so yield hunters, as they're known in the industry, sometimes get caught buying a blue chip on sale with a 5, 6, 7% yield, and all they see is that investment, that company, keep on declining. So research stocks thoroughly. Like, these are your vehicles for your income portfolio. So you must, this is a constant activity that you need to be engaged in. Okay, so that's the first point. The second point is massive theta decay. What do I mean by this? Through the use of covered calls and naked puts, one can drastically improve income from underlyings. Now, remember, in the first point was to research our stocks thoroughly, primarily stocks that grow their dividend every year. This gives us downside protection. If we are invested in a quality stock that, for whatever reason, it could be a war, it could be an internal situation in the company, it could be external factors in the market, and that respective stock drops, we have a growing dividend to support us while that stock is temporarily underwater. Okay, those dividends should be invested back into the company to bring down that cost basis over time. Why? Because we can't sell calls or sell puts against that position, especially if it's a big position and we don't want to double down on our existing position. So massive theta decay is when we can, like in the Spectra Energy video, we can sell puts and calls around these positions. Always being wary of when a company announces earnings and when a company pays a dividend. Okay, so I just want to show you here a screenshot of a brokerage account I have where I can explain this in better detail. And I really hope this image stays with you as you now hit the ground running, investing for income in the stock market. Okay, here I have if we look here, this is my account in Interactive Brokers. Pending all means all of the options trades that are basically pending. So these basically are all covered calls where we are selling premium and then buying back these trades for more or less 50 or 60% profit. Okay, so if we keep on going down and down and down, we can see I don't know, maybe have 20 or 30 profit-taking trades to basically take money out of the market when we want to. And that's what this online course is all about. It's all about you taking back control, you investing for cash flow, you getting paid when you want to get paid. Now, for the big thinkers here and the guys and girls with the big goals, this page can be 200 trades, 2,000 trades. It can be anything you want depending on how big your portfolio is at any given time. But the more of and this is one thing I can guarantee, the more covered call trades and naked put trades by keeping your size small that you have in your portfolio in a given time that your portfolio can manage with respect to capital, then the more money you're going to make, period. This is period. That, and as I've said, this amount of trades can go to any amount that you want. Okay, yes, it's going to take a lot of work, but this is an income-based strategy where cash flow is what we are looking for on a daily basis. So let's just go through one of these trades here. For example, if we go to watch Novartis, NVS, we have a covered call trade here on May 18. It's good till cancelled. Okay, this means that this trade will stay in operation until it basically until we reach the expiry date. Okay, so I always put it in as GTC. Why? Because usually when you open a trade in any brokerage account, the trades are just there for the day. Okay, so the GTC, or the good till cancelled trades, will stay working for you, and this is leverage at its best. It will this profit taking trade will stay working for you until you gain that profit. Okay, and let's just discuss this. Okay, I probably sold this for $1. I'm looking to buy it back at 50 cents, which would give us $50 profit on this trade per contract. Okay, so there's only two things that we're definitely holding shares here, but there's only two things that can happen here. Okay, and this is why options are so valuable in a trader's portfolio when the trader knows what he is doing. All options expire worthless. So there's only two things that can happen here. One, the price of Novartis is above 85 at expiration. What happens? Then this trade will just disappear. It would mean that it'll never get filled because the price of the calls go up as the price of the stock goes up. So what would happen would be the shares that we have in our portfolio would be taken away at the strike price at expiration. What does this mean? It means that we would make money on the shares. We would make money on any dividends that were paid out during the lifetime that we were holding the shares, plus we will get paid on the full amount of the call option. So we would probably get paid an extra $1. Okay, that's what happens if the shares go up. If the shares go down, well, we'll just get as discussed in previous videos, we will just get filled on this order for profit. Okay, what do? We wait for the price of the shares to rebound again, and we will sell more calls. Okay, we will always sell calls above the price, at a strike price above the price of the shares. Okay, so that we will also profit in any event that the shares will be taken away from us. That's the only thing that can happen. Okay, so this is what you call massive theta decay, or massive leverage in the stock market. As I've said, I've only got about 20 or 30 trades here, but there's no reason why this can't be 1,000, 2,000, depending on how you think. So basically then the trader will have all these profit-taking trades working for them every minute of every day of every month. Okay, that is powerful. Again, only if you are selling these calls or selling naked puts, depending on which strategy you want to use and how much buying power you want to use up on quality, proven, researched stocks. Okay, anytime you sell a put, you need to be confident and prepared to be able to hold that stock for months. Okay, you might never get a chance to sell a covered call on that for months if you get assigned on your naked put. So just be wary of that, which is why you really should have a lot of homework done on every stock you do. You research before you sell naked puts, and then sell covered calls, obviously, conversely. Now if you go back to the PowerPoint slide of the takeaway sheet, the third part is emotion, for the most part, is done away with. An income-derived portfolio does not focus on capital appreciation. Investing for cash flow does away with emotional trading. And as I've discussed here, these are all working for you 24/7. Okay, we are not necessarily looking for capital appreciation. Yes, covered calls and naked puts are primarily bullish trades, but we don't know when these bullish movements are going to happen. So these are actually designed to take money out of the market when our underlyings go down. Okay, so, and also depending on how involved the trader is, just say on this Novartis again, covered call, if a person may do, if there was a lot of volatility in a given month, 2 to 3 trades in a month. Okay, so there is so much leverage with theta that like all these options are declining in price every day. So the more trades you have up on your pending page here in your broker, definitely the more money you're going to make. So an income-derived portfolio does not focus on capital appreciation. Investing for cash flow does away with emotional trading. So that's the great thing about this strategy, is we get paid from options when we get paid from our dividends, and capital appreciation is a bonus when our stocks are called away from covered call trading. Okay, never give up. Never give up. If you go out tomorrow and buy some stock and start selling some calls, or you decide to sell some puts, naked puts, and things don't go well at the start, just remember, and this is a very good piece of advice I learned from a mentor many moons ago, you're always going to end up selling your weakest position. Okay, so your agenda, your goal is to not have any weak positions in your portfolio. That then you're building a portfolio on rock and not on sand. Don't be going for the high yielders if they don't have strong competitive advantages. Don't be going for cheap stocks if again they don't have strong competitive advantages. It's the resilience of stocks that, and you can see that if you do your studies over the last 15 years, you will see that the resilient stocks have always bounced back. So your goal is, before you set any options on your underlines, is ensure you have no weak positions in your portfolio, because when the going gets tough and you have a lot of paper losses on some positions, you're going to be enticed to sell some positions, especially if you do not believe in those positions 100%. So don't let this be you. Start building your portfolio on rock so that it will keep you there and provide income for you and your family for many, many years to come. Thank you very much.